Welcome to DigitalK.
I believe I've never had an entrance this dramatic, and from henceforth I'm not speaking unless I'm introduced in another way. My name is Anthony, and I am one of the managing partners and co-founders of Nexo. And the topic I've chosen for today's presentation is banking in a tokenized world. And before we dive into the deep and go about the ins and outs of this concept, let me tell you a few words about what Nexo is all about and why we think that is important. So what is Nexo? To put it in a few simple words, we are providing banking services for the blockchain space. And as any bank would have it, our bread and butter, where we make the bulk of our money, is via lending. In our case, these are our signature instant crypto credit lines. And in order to scale the operation and to give back to the community, we have turned, in our effort to scale the operation, to the community first. And we have provided and developed a earn product, which right now allows the retail and the institutions of this world to earn up to 6.5% per year on their stable coins and more recently on their euros. So let's have a quick look at how Nexus instant crypto credit lines work. It's staggeringly simple. You come to Nexo, let's say, with $10,000 worth of Bitcoin. You transfer that to a multi-signature wallet held at our partners and custodial pioneers, BitGo. They are a qualified custodian, so the collateral is locked up in there. And you instantly receive a credit line from Nexo for about half the amount of and the value of the Bitcoin that you have transferred. And this is fully automated. It takes a second for us to actually issue the loan, which you can then withdraw to your bank account, usually same or next day. We service 200 jurisdictions and 45 different fiat currencies. We have a vast network of banking partnerships. So we provide loans in the most efficient of manners. And that is what has made us the world's #1 in terms of sheer covering of the world. As I said, 200 jurisdictions and 45 currencies, but also the #1 choice of the retail market because we are #1 in terms of the amount of loans actually issued. And once you withdraw the funds, you can spend it on a variety of things. We had people go on a vacation. We had people buy cars. Miners leverage their position to buy more equipment or pay their electricity bills or whatever. You still can pay that with Bitcoin. And we had a very interesting use case a couple of months ago when we executed the world's first crypto mortgage with Brock Pierce, the American entrepreneur and Bitcoin fan, to say the least. He owns 95% of his net worth in Bitcoin and other cryptocurrencies. So when he wanted to buy that second home, or might not be the second home, but one of the many homes he owns throughout the world, he needed liquidity in euros. And we provided that for him, and it was a smart move because Bitcoin, as you know, the past few months has been taking off dramatically, and he profited from that. For him and for Bitcoin proponents, this is the best of both worlds. You get to keep your crypto assets, and you access liquidity whenever you might need it in the most efficient and flexible of manners. So once you repay it, you get your Bitcoin back, and it's a win-win for the customer and for the overall space, because borrowing rather than selling, apart from being tax efficient, as it doesn't trigger capital gains tax, is good for the market because it eases the selling pressure. So this is our flagship instant credit line product. As I mentioned earlier, we now have the earn product, which yields 6.5%. With full flexibility, you can add and withdraw your funds whenever you see fit without any prior notification. You just request it and you receive it almost instantly, with stablecoins instantly, with euro as soon as the bank settles the transfer. And you don't strike me as a crowd that necessarily might put their money in on a deposit in a bank, but if you try to do that and you go to the Deutsche Banks, RBS, and Barclays of this world, they would pay you a staggering 0.015% per year if you lock up your money for an entire year, whereas with Nexo you get 130 times that amount with full flexibility. You might say that bank deposits are perhaps safer, but we all know that since 2008, at the very least, they're sitting on toxic assets, so it might not be that safe after all. Yes, the ECB guarantees some of that, but it only goes up to 100,000. And with Nexo, the amounts that you give us, they are backed by our our portfolio of assets, of very liquid assets and collaterals like Bitcoin and all of the others, and we get at least $2 for every one we lend. Interest gets compounded daily, there are no fees, we pay you daily, each day you see more money in your account, and the custodial assets are of course insured for 100 million with our arrangement with BitGo and Lloyd's of London. This is about Nexo. As I said, we have almost a little more than 200,000 users registered on the platform, 200 jurisdictions, 45 currencies, and we have been able to very swiftly, 1 month after our token sale, to actually launch the platform. It has been live for a year. It has been stress tested during the most severe of bear markets, the 2018 correction, and we have been able to so quickly develop this because of our more than 10 years experience and fintech success with our other company, Credissimo. Now, why is that important and why am I wasting your time with this? It's because of the mega trends that we're seeing in the world right now. So let me walk you through that. Right now, this is a visualization of the wealth distribution of the world. Right now, the cryptocurrency markets are at around 300 billion. I was optimistic when doing that slide. It's slightly less, but I think it's fair to say, and this is my personal prediction, we will see all the cryptocurrencies, their combined market cap at $1 trillion this year. Quite bullish on Bitcoin and some of the other more real digital assets. But even if we go to $1 trillion this year, this is a drop in the bucket because of this, guys. How many of you own gold? Yeah, not that many hands. Should have thought of that. Millennials and blockchain fans, not necessarily gold bugs. How about stocks? Do you own equities? Not that many hands. I might do another panel on why that is wrong. In the meantime, I suggest you read one of the books of Tony Robbins. He makes a perfectly valid case of why you should own equities. But real estate, who has exposure to some form of real estate? Yeah, quite a few hands going up. As you can see, we are in the trillions here. Gold is 7 trillion, then stocks around the world, almost 80 trillion, and real estate is about 200 trillion as a total market cap. The truth of the matter is that just around 30% of the world's wealth is in cash and cash equivalents, which means that 2/3 is not. Let that sink in. This is the dramatic part of the world's wealth. And it means it is idle there, not even accounted for in any meaningful way. But this is about to change. And it's about to change with something that people in the blockchain, we call the tokenization of the world. Now, the previous speaker touched upon that quite nicely. But this is the idea that real world assets like stocks, bonds, commodities, real estate, and even fine art are getting tokenized as we speak and brought on chain to be traded, to be exchanged, to be borrowed against in the most efficient of manners. let me quickly guide you how that exactly unfolds, and let's take the Mona Lisa here for a second. Let's say your great-great-great-great-grandfather was Duke in Florence, and it turns out you're the rightful owner of the Mona Lisa, and you own it now. So what can you do with it? You can sell it to a Russian oligarch for a couple $100 million. That is nice, but he'll end up probably locking that up in the Geneva Freeport vault for the world not to see, so not that great. You can hang it up in your living room. Not that great either. You got to worry about the security, and all you can do is you yourself marvel at its beauty. Or, more dramatically, you can, as the picture suggests, shred it, but metaphorically, you can cut it up into tiny little pieces and bring it on chain, or on the blockchain itself. And I think this is the killer app of blockchain technology. First one was Bitcoin. Second is the tokenization of the world. As the quote here of Mark Andreessen suggests, there are only two ways in business to make money. One is to bundle, and the other is to unbundle. And in the case of the Mona Lisa, it's a perfect example because you can have fractional ownership of the painting itself, which I don't think I have to convince you, but 10 years from now, it's probably going to be more valuable. So you can give this option, sell it even, borrow against it to a great number of people, and you participate in the asset of appreciation, and then you can unbundle the second feature, which would be like you giving the Mona Lisa or the bulk of people that own the Mona Lisa to a museum, and the revenue stream from visits to the Louvre goes back to you. And this is phenomenal because we, in Europe and the United States, we tend to take a very Western-centric approach to the world. And we have the JP Morgans and the Bank of Americas and the Fidelities and the Charles Schwabs, and we're quite comfortable. But how easy is it for you, the stock owners, to transfer that stock to somebody in Australia? It's quite difficult. So it is still, despite being advanced, quite inefficient. So we're talking here about inclusiveness on a global scale, and this is the real transformative value for the blockchain space and for the technology. Because we have people in the third world, we have a lot of clients from, for instance, South Africa. They don't have the same access that we do, and this concept, the tokenization of the world, will allow them to prosper and manage their money the way we do it. And I don't have to convince you that the West is better off, at least financially, than the developing world. So, bottom line, tokenization of the world is unlocking the value of idle assets, and it's happening as we speak right now with a great number of companies. Our partners at Paxos, for instance, are tokenizing gold and making a stable coin against gold. So the most exciting of times to live in. So the road ahead for Nexo is, while this is happening and we're seeing the onboarding of more and more assets to the blockchain, and deploying blockchain technology, we're developing commercial banking capabilities, super exciting stuff, which will allow us to offer even more services to our customers, and will in turn grow our balance sheet, and our investors, the Nexo token holders, which is a security, will profit handsomely off that. We share 30% of everything we earn with Nexo, with the community. And while we wait for the tokenization of the world, we have to provide the conveniences that people are accustomed to. And this is with the upcoming Nexo card, which is coming up in Europe very, very soon. And the bottom line and our ultimate goal is to be able to lend against all tokenized assets, and all assets will be tokenized sooner rather than later. We'll be paying interest on that. We securitize the Nexo portfolio, the loan portfolio, which will give people even more ways to participate in that, and we'll develop a full and complete digital banking experience. Last but not least, we are always hiring. We have great parts of the company, of the operation in this wonderful city. So feel free to reach out. And thank you so much for your kind attention.